Welcome to Edmonton Real Estate Today. I am your host, Leroy Warden, and today I have with me Donna Austin of Canadian Western Bank. Welcome, Donna.
Oh, thank you very much.
So, Donna, I wanted you to share with our audience a bit about your background and yourself so that they know something about you.
I've been in banking about 40 years. I know I don't look the age, but it's been about 40 years. I started at a very young age in banking, and I've been in all sorts of different positions in the bank. One of my favorite has always been in the mortgage area and helping people. It's always the biggest purchase of their lives, and I like to be a part of it. Now I'm into the stage of the grandchildren buying the houses,
Right.
so it's very exciting.
Oh, that's awesome. So, Donna, when you're not managing and assisting people with banking, what will we find you doing?
I manage 34 horses. We are the owner and operator of a boarding stable as well as a riding school. So I have approximately 65 riding students and 34 horses, and I have 3 coaches out there. And so I'm very, very busy working on the farm and having the farm values and bringing those into the bank. And Canadian Western Bank is very much within my values and my family values, and have enjoyed working there for the last 13 years. I'm at the old Strathcona branch, which is, again, kind of my area, being in the old Strathcona area.
Oh, okay. So today we want to talk about those new mortgage rules for our listeners. So can you tell us, what are the new mortgage rules?
In January 1st of 2018, the federal government felt that they had to put some restrictions on qualifying borrowers because it looks like interest rates are going to start moving up. We don't know exactly when and how much, but all the predictions are rates are going to move up. So they wanted to ensure that someone purchasing their home would be able to afford the mortgage payment today and tomorrow. So the new mortgage rules are you have to qualify at the Bank of Canada rate, being 5.14, that's their 5-year rate, or whatever the bank has given you their rate plus 2%, whatever is greater, either 5.14 or the bank's rate plus 2%.
All right, so you would qualify at either of those rates,
Whichever
is
higher
greater,
of the two, yes.
and then that would determine the buying power for that buyer.
Correct.
Okay.
Yes, that necessarily isn't your payment. Your payment would still be at the negotiated rate, but you must qualify at the higher rate in case rates move up and you're in a position where you're renewing at a higher rate. You can still qualify.
So how does these new rules protect the home buyer coming to the market right now for looking for a mortgage?
So you're not overbuying, so that you are qualified for a mortgage that you can afford. In case mortgage rates do move up, you don't have to worry not being able to make your payment. You'll still be able to make your payment even though the rates will move. So it protects you in that you're not overbuying and you're not house poor.
I see. There are costs associated with buying. So is there any costs associated with these new mortgage rules?
No, the
to
costs are
homebuyer?
the same. You still have your appraisal fee, you still have your solicitor's fees, and you still have your CMHC fee based on the amount of mortgage. So the costs don't change. The CMHC fees would possibly go down if you qualify for a lesser amount of mortgage.
Okay. So can you give us, maybe by giving an example, any effect that the new rules have on a potential buyer trying to qualify today?
Well, in December of 2017, if you qualified based on your income of, say, you and your spouse, you would let's just use an example of 300,000. So that's based on the rules in 2017. In 2018, you may only qualify for 260,000 because you have to qualify at a higher rate. Therefore, the payment is higher, and even though your income is the same, you still have to qualify under the same mortgage rules.
Okay. So how does the new mortgage rule affect a buyer of a new home build? So not someone buying an existing home qualifying, but like we're going to a new home buyer this year.
Same rules. So you have to qualify at the higher rate. So you're pre-approved for a mortgage at 5.14% or a 5-year rate at +2, whatever is the greater.
Oh, I see.
And you
Okay.
must qualify under the same new rules as an existing.
As an existing. So whether I am buying brand new or whether I'm buying resale home,
Same rules.
it would be the same rules.
Correct.
We're relatively early in the year, so someone who's coming to the market where they've already done a contract in 2017, let's say November of 2017 or even December of 2017, and so they've finalized their deal with the home builder to purchase a home. Home is under construction. They're being funded for their new mortgage in 2018, maybe let's say 6 months to 8 months down the road. How does the new rules affect that home buyer?
Gets a little bit complicated. If you qualified and had a commitment letter from the lending institution prior to January 1st of 2018, you would qualify under the new old rules. If you did not qualify and have a commitment letter in your hand from the lender until 2018, you're under the new rules.
I see. So I have my contract with the builder. I then have gone to my bank and I have a commitment letter signed and from the bank, and if it's done in 2017, it's under the old rules.
Correct.
But if I had my contract signed with the builder in 2017 and I signed my commitment letter in 2018 with the institution, then I'm under
New
the
rules.
new rules. All right. And you say commitment letter for our audience, that means
That's a commitment that the bank is willing to give you a mortgage at X number of rate and X number of dollars.
okay.
So you have to have a confirmed commitment letter from the bank saying that you're approved.
That we're approved. Okay. Now, does the new rules affect home sellers in any way?
Well, it would, because it takes some of the people out of the market that potentially could have been buying your house. If they qualify for less, then they may not be able to buy your house any longer.
I see. Okay. How do the new rules apply if someone is renewing their mortgage?
There is no requalification on a renewal with most institutions. The only time that you have to do a requalification is if someone is asking for more money. But now you can only do an equity takeout of up to 80% of the value of the home. So if there is any new money advanced, you're under the new rules. If it's a straight renewal, then you do not apply under new rules. It's just a straight renewal.
Right. So that would take us to what we say equity takeout or refinancing the property. It's the same thing.
Same thing.
And therefore, if I am a homeowner and I am renewing my mortgage, not getting new money, I don't have to
Correct.
qualify under the new rules. But if I am an existing homeowner and I am getting new money by refinancing or doing an equity takeout,
You have to
on the
qualify
property,
under the new rules.
would have to qualify under the new rules.
Yes.
Okay. And what if I am just transferring? So my mortgage is up for renewal.
Yes.
I want to transfer my mortgage between institutions.
Then the bank
How
would
does their rules
qualify
apply?
you under the new rules. All banks qualify people that are coming in with their mortgage.
Yes.
So they would qualify you under the new rules. CMHC doesn't qualify you again if there's no new money being advanced,
Right.
but the bank would.
Okay. So I am coming to you from a different institution. I would have to then provide you with information to show you that I qualify
Yes,
for the mortgage, and if I'm transferring that mortgage to your institution or to any institution, the institution would therefore qualify me to make sure I could make my payments.
correct. Because it's a new mortgage for us.
Right.
Even though you're transferring from another institution, it's a new mortgage for the new lender. So we have to qualify you under the new rules.
Okay.
If there is new money being advanced, and even if there isn't money being advanced, we
Right.
still have to qualify you under the new rules.
All right. Okay. What are the drawbacks on these new rules that you could think of overall for the homeowner?
I don't look at it as being a drawback. I look at it as being a caution sign that you have to be cautious of what you are applying for and what you can buy. Some people have overbought and then they find that they're very house poor. So I look at it as a caution. Really do your homework. Use one of us at Canadian Western Bank as a mortgage coach so that we can walk you through it so that we know that you can qualify for X number of dollars and that if rates go up, you're protected, that you aren't finding yourself in a financial hardship case.
Okay. So how does someone check that what they would qualify for under the new rules? Like if I'm someone out there right now going, hey, I'd like to buy a home, how can I check to see what I qualify for under the new rules?
There's a couple ways. Again, you can, with us, you would come and sit with one of our mortgage coaches and we would give you all that information and show you the numbers. Or you can go on to the mortgage calculators. There's several institutions that have mortgage calculators on their websites, and you can use those for a quick reference. But it's always best to sit down with an advisor and see exactly what you can qualify for, because there's different ways to get to what you want to get to.
All right. Okay. Do you have anything else about the new mortgage rules that you want to share with our audience?
No, I think that covers it. It has slowed the market. We've already seen that. The economists have said that the market is slowed by about 21%, but that is going to be short-lived as people get comfortable with the rules again and know what they can qualify for. You'll see that starting to move up again. But I think it has put caution into the home buyers market so that they are buying what they can afford.
All right. Well, that's wonderful. Well, Donna, I want to thank you for sharing such great information with our listeners. I believe that the market itself would be better served by these new rules in the long run. So if people wanted to find you or find you at Canadian Western Bank, do you have a phone number or website that they could go to?
We're at the Old Strathcona branch, and look us up, and our number is 780-431-6231. That's my direct line, and I'd be more than pleased to talk to anyone.
Well, that'd be awesome. Again, Donna, thank you so much, and we appreciate you coming out.
Thank you.
All right. If you enjoyed this video, please give it a thumbs up and share it with your friends and family. Any additional topics you'd like us to cover, leave it in the comments. Hit subscribe below and you will receive our new releases. Thank you so much for watching. I want to welcome you to Edmonton Real Estate today, and I want to, there I go again.
Yeah, you have to say I'm with Canadian Western Bank.
This is Canadian, Edmonton Real Estate today. My name is Leroy Warden and I'm your host. Today I have Donna Austin, which is with Canadian Western Bank.
Do that again.
We'll do that again. I just looked over. How difficult was that? I did it so well. This is Edmonton Real Estate today, and I'd like to welcome our guest, Donna Austin with Canadian Western Bank. She's here to talk to us about the mortgage stress test. Donna, welcome.
Thank you, Leroy.